This is part 2 of question 48. So now we are going to go in the report, starting with impact on the company. So you write the subheading and then you write this. Okay, benefits to Conejo included the areas discussed in part A above. So you're referring to which part? And as suggested by the CFO, the estimate in appendix 3. This is how you refer. Okay. The estimate in the appendix 3 assumes that the interest payable on the new bond and the extra interest payable on the existing bond are net of 15% tax. Therefore, the tax shield reduces the extra amount of interest paid. Further, it is likely that because of the large amount of debt finance, basically we are saying the impact of it, impact of increased debt. So because of that increased tax, we are having tax, extra tax we have to pay. Sorry, interest. So because of that interest, it is tax deductible. Therefore, the tax shield reduces the extra amount of interest paid. Okay. Further, it is likely that because of the large amount of debt finance which will be raised, the company's assets would have been used as collateral. This will help protect the company against hostile takeover bids. Additionally, Proposal 2, Appendix 3, appears to be better than Proposal 1. You have to say which proposal is better for the company. With the why you are saying this, you have to give your statement based on some facts. So what are you going to say with a lower gearing figure? So you are saying that the lower gearing figure and higher EPS in the proposal 2. However, this is dependent on the extra investment being able to generate an after-tax rate of 12% immediately. Okay. Then feasibility of this should be assessed further. This type of sentences, please try to include. Okay. Because this type of, what do I say? Calculations and all are based on so much of assumptions. Okay. That you should always write the statement that the feasibility of this should be assessed further. Such sentences you need to write. Okay. Now coming to the next para. The Conejo company may also feel that this is the right time to raise debt finance as interest rates are lower, and therefore it does not have to offer large coupons compared to previous years. This is based on the observation you are writing. Okay. Appendix 1. So you are writing each in the paragraph. Appendix 1 estimates, and try to bring out some main figures and all so that you can compare. Appendix 1 estimates that the new bond, yes, you have to talk about the new bond for the company. Estimates that the new bond will need to offer a coupon of 3.5%, whereas the existing bond is paying a coupon of 5.57%. All this are from your Appendix 1, your calculation. Next, the benefits above need to be compared with potential negative aspects of raising such a substantial amount of debt finance. Conjo needs to ensure that it will be able to finance the interest payable on the bond, and it should ensure it will be able to repay the capital amount borrowed or able to refinance the loan in the future. The extra interest payable, Appendix 3, will probably not pose a significant issue given that profit after tax is substantially more than interest payment. However, the repayment of the capital amount will need careful thought because it is significant. So all this I cannot teach you what you have to write exactly. If you're asking me how should I know what exact, these are the points. It is based on your calculation. You are seeing your calculation, which amount is more significant, which is not. When you have to take a debt, what are the issues you need to think about, whether you will be able to pay debt on time, whether you'll be able to pay that extra interest, or whether it's going to have an impact, and you are seeing your profit also with the interest. So all these things you have to do it. Okay, there is no such thing that I cannot tell that look at this figure, this figure, this figure. That's why it's better to do this type of questions at least multiple times, not just one time, because with one time you will not understand enough. Coming to the last, okay, just you are explaining your figures. Okay, you can say that the gearing increased in under proposal 2, so proposal 2 was better for the company. It's going to improve their financial position, their financial risk is going to increase because of the gearing. So all those things you can write in your own words. This report you can write in your own words. It should not be the same as it is, which is given to you in the answer. This answer is usually given to you as a framework for you to check your answers against it. It's like a benchmark. Okay, it's not compulsory that you have to write the exact points only. So don't get so tense that I'm not getting these points and all. You will never get your answer when you check with the answer behind. You will never get it same. There will always be differences. That's completely all right. So substantial increase in gearing, especially with respect to proposal one. All these things you should be able to say that proposal one has a very high gearing. So appendix 3, always refer to appendix, which appendix it is, 1, 2 or 3, may worry some stakeholders, right? We all know that what if gearing happens, what will happen, okay? So it may worry some stakeholders because of the extra financial risk. So if gearing increases, financial risk increases. However, based on market values, the level of gearing may not appear so high. The expected credit migration from A to triple B seems to indicate some increase in risk, but it's probably not substantial. We saw that in the bond also, bond valuation. You can talk about appendix 1, 2, 3. Basically, those calculations you have to bring here and show how it has impacted the company. You can talk about whether the financial risk increased or not, the gearing, the impact on the profit for the company, the financial position, all those things you can talk here. Okay, the last para under that is the board of directors should also be aware of and take account of the fact that going to the capital market to raise finance will require the company to disclose information. Okay, so since you want to raise more debt, right? What happens when you want to raise more debt? If you go to the market to raise that finance, you have to disclose. The company has to see all these are showing the impact on the company only. That's why you're including these points here. They have to disclose information which may be considered strategically important and could impact negatively. Disclosing more information is not always good, whereas Conjo has a competitive advantage. On areas where the company might have competitive advantage, now they're going to lose it. Remember, Conjo is a limited listed company. Okay, now coming to the credit rating companies, reaction of credit rating companies. Right, just see the answer. It's quite lengthy. You will not be able to write so much. You're not expected to write this much also. Maybe for 4 lines or 5 lines. Or basically, the point is this, that when you have to pick answers for this, just use your head a little and think which appendix is more relevant to this. Appendix 1, appendix 2, appendix 3. Okay. Appendix 1, yes, because it is about bond valuation and all. So you can use appendix 1 here. Appendix 2 also, yes, because it is about Macaulay duration and all. Change, right? And appendix 3 also, not so much. But 1 and 2, yes. So just make sure which is more relevant for this and then just write it. So credit rating assigned to companies, but we'll just read these answers, okay? Credit ratings assigned to companies and to borrowings made by companies by credit rating companies depend on the probability of default and recovery rate. All these are your knowledge and all, right? You don't have to write all this. It's not needed. This is your knowledge part. Just directly refer it to the case study and start explaining. No need to give all this line of definitions and everything. A credit migration from A to triple B means that Conja has become riskier in that it is more likely to default and bondholders will find it more difficult. Right? What does it mean? This you have to say. Because it changed from A, so it will have an impact on the company. This you have to say. A credit migration from A to triple B means what for the company? Means that Conjo has become riskier in that it is more difficult to default and bondholders will find it more difficult to recover the entire loan if default does happen. Nevertheless, the relatively lower increase in yield from A to triple B compared to triple B to double B indicates that BB can still be considered a safe investment. No need to write this. Where is it? This line is not needed. Right? You will not have so much of time to compare with the double B. Okay, so it's not needed. Just go straight to the point. My point is, no need to write so much of complex and lengthy sentences and waste time. To the point. Coming to the second paragraph. Duration indicates. So you are talking about duration, which is in the appendix 2, the Macaulay duration. You have to talk about duration. Okay. Duration indicates the time it takes. So you are first giving one brief definition. Okay. It is better to give one brief definition, not lengthy. Just one sentence, one line, the definition of duration. Then it will help you to explain better the impact of duration. So duration indicates the time it takes to recover half the repayments of interest and capital of a bond in present value terms. Okay, that's the definition of duration. Okay, so this definition. Duration measures the sensitivity of bond price to change in interest rate. Okay, a bond with a higher duration. You need to talk about this. You need to link with the bond with the duration. That means both appendix 1 and 2 you are using. A bond with a higher duration would see a greater fluctuation in its value when interest rate changes compared to a bond with a lower duration. Appendix 2 shows that a bond, you see, once you said a statement that bond with a high duration will have a greater fluctuation, immediately you are linking it to the appendix 2. Shows that a bond which pay interest and capital in equal annual installments, that means fixed, will have a lower duration. We saw it was 3 years. You can even mention the years also. Just go to your appendix 2 and check under fixed where it was fixed. It was 3 years. This is because a greater proportion of income is received earlier. Why is it lower duration? Lower duration is better always. Remember that. That means you are receiving it fast. This is because a greater proportion of income is received earlier and income due to be received earlier is less risky. Yes, if you are receiving the earlier income earlier, is it better or not? It's better, right? Who wants to receive their income later? It is always better to receive the income earlier, the cash flow earlier. It is less risky. So all these are generally practical points only. Nothing hard. It might look lengthy. You read it like this. So therefore, when interest rate change, this bond value will change by less than the bond with a higher duration. Yes. The CEO is correct that the bond with equal annual installments of interest and capital is less sensitive to interest rate changes. But it is not likely that this will be a significant factor for credit rating company when assessing a credit. See, there was a fact. Whenever someone makes a statement in a case study that they made a statement and this will happen and this will happen, you need to say whether they are correct in their statement or wrong in their statement. You need to mention. So here they are saying the CEO is correct that the bond with the equal annual payment of interest and capital is less sensitive to interest rate changes, but it is not likely that this will be seen. Okay, so even though it is less sensitive to interest rate changes, they are trying to say that this is not the main factor for the credit rating company for assigning credit rating. A credit rating company will consider a number of criteria when assigning a credit rating, as this would give a more appropriate assessment of the. This is about what? Reaction of credit rating companies. You are talking from the point of credit rating companies. So some theory of it also you should know. Because this, if you see, okay, this is a little bit of theory also. How credit rating is based on what factors they assign ratings. Little bit you should know. It will help you more. If you don't know, it's okay. From your calculation above, you can give, but if you know, it's better. Okay, so a credit rating company will consider a number of criteria when assigning a credit rating, as this would give a more appropriate assessment of the probability of default and recovery rate. This criteria include, for example, from here onwards is your theory part. Industry within which the company operates. It is based on that industry also where they operate, whether the credit rating will be high or low. In this, what was this industry? It was IT industry. IT industry is risky and unstable. You know, the company's position within that industry, yes. The company's ability to generate profits in proportion to capital invested, the amount of gearing, the quality of management and amount of financial flexibility in the company versus the credit rating. So all till here, okay, from here to here, all these are your theory part. How a credit rating company assigned ratings to the company. What factors? I have made a video on this also. You can go and check how credit ratings give scores or ratings for the company. A credit rating company will be much less concerned about the manner in which a bond value fluctuates when interest rate changes. Yes, this you have to talk about. Must. Has to be there. This line has to be there. This is like a conclusion you're giving at the end. What's okay? See, one thing you have calculated. Then What is it? What is the impact of it? You have to tell. Otherwise, just keeping that bond value aside is no use. So that bond value, fluctuation of that bond value, what is the impact it is having on the credit rating company? You have to tell at the end. It's your conclusion, like, because you have calculated. See, whatever you have calculated, you have to tell at the end the impact. So a credit rating company will be much less concerned. They are not concerned about it. Yeah, about the manner in which a bond's value fluctuates when interest rate change. Now coming to the impact on equity holders. For equity holders, you need Appendix 3 because your EPS is there, your financial position is there, your profit after tax is there for proposal 1 and 2. So basically, you have to use all the three appendix for the impact on equity holders. The purpose of the financial reconstruction would be of interest to the equity holders if, for example, the company sells proposal 1. Now you have to say what happens when company sells 1, what is the impact, and what happens if they sell at proposal 2. So if the company sells proposal 1 appendix 3, it may give equity holders an opportunity to liquidate some of their invested capital. Okay, because they are investing additional assets on a new business. At present, the original members of the company hold 40%. See, this is given from the case study itself. That, okay, let me take you to that place where they told it is hold 40 and 60. Okay, here, the second paragraph. Conejo was successful illustrator, okay, offering 60% of its share capital to external equity holders while the original founding members retain remaining 40% of the equity capital. Okay. Okay, I'm to the report part now. So original members hold 40% of equity holder and propose one provides them with an opportunity to realize a substantial capital without unnecessary fluctuations in the share price. Okay, proposal once meant what? Increasing debt compared to equity. So that's what's happening because of that. To release a substantial capital without unnecessary fluctuations in the share capital. It has nothing to do with share price change because it is only dealing with debt. Selling large quantities of equity shares in the stock exchange. It's like a repurchase of, okay. So selling large quantities of equity shares in the stock exchange may move the price of the shares down and cause unnecessary fluctuations in the share price. If you're selling it. If, on the other hand, proposal to appendix 3 is selected, any additional profits after the payment of interest will benefit the equity holders directly. Benefit. In effect, debt capital is being used for the benefit of equity holders. So that debt capital, right? That debt capital. What is that debt capital? That you are taking that bond, you are investing it in non-current assets. So you are benefiting the equity holders. It may be true that equity holders may be concerned about increases which higher gearing will bring. Yes, it is true that there's a higher gearing. So it is a area of concern for equity holders, and because of this, they may need higher returns to compensate for the higher risk. However, in terms of market values, the increased gearing may be of less concern to equity holders. Conejo should consider the capital structure of its competitor to assess what should be an appropriate level of gearing. They should check with their, because if they know the capital structure of competitor, they can check their gearing position and compare with the competitor's gearing position. Equity holders will probably be more concerned about the additional restrictive covenant which will result from the extra debt finance and the extent to which this covenant will restrict the financial flexibility of the company when undertaking future business opportunities. The restrictive covenant. Basically, what are the areas where equity holders could have concern about, issues from, problems from, and what are the areas where they are going to get benefit from? Those are the things you have to talk in your report only, in different paragraphs. So each concern is being explained in different points. If you see this is 1, this is 2, and this is 3, equity holders may also be concerned that because company has to pay extra interest to debt holders, it is ability to pay increasing amount of dividends. Okay, its ability to pay increasing amount of dividend. Yes, see, shareholders will think about dividends because now it is paying extra interest for dividend, high debt. Will it be able to pay dividend in the future? Could be affected. However, Appendix 3 shows that the proportion of interest relative after tax profit is not too high and any concern from the equity holder is probably unfounded. Coming to the debt holders. After that, we are reaching to the conclusion. Although the current debt holders may be concerned about the extra gearing which the new bonds would increase from Appendix 1, shows that the higher coupon payments with the current debt holders will receive would negate any fall in the value of the bond due to credit migration. Given that currently Conejo is subject to low financial risk and probably lower business risk, it is unlikely that the current and the new debt holders would be overly concerned about the extra gearing. The earning figure in Appendix 3 also shows that after-tax profit figure provide a substantial interest cover. It increased very highly. So, substantial interest cover and therefore additional annual interest payment should not cause the debt holders undue concern either. Even though interest is increasing, it will not cause a problem for the debt holders. Why? Because of profit after tax increased very substantially. So, because of that, interest cover was very substantial. You are having now more profit to pay interest. So, it should not be an issue. The current and the new debt holders would be more concerned. Basically, you're talking about the concern if you see in each paragraph for each stakeholders. Current and the new debt holders would be more concerned about the company's ability to pay back the large capital sum in 5 years' time. Yes, usually when what happens is when you take a debt, they will be more concerned whether that big capital amount you'll be able to pay back or not. So that could be one of the concern and that you can write in your own words. However, a convincing explanation of how this can be achieved or a plan to roll over the debt should allow these concerns. The current and the new debt holders may be concerned about the company is not tempted to take unnecessary risk with the additional investment finance, but sensible use of restrictive covenant and the requirement to make extra disclosures to the market when raising the debt finance should help mitigate these concerns. Okay, so how they can mitigate this concern, those also you can write about. Coming to the conclusion. Now, before coming to the conclusion, check whether you have answered all the requirement properly or not. Okay, I'm going to go to the requirements again. Have you explained coming from the first part? Part A, yes, we talked about that. The theory part. Part B, first part. Changing the value of the current bond and coupon rate required for the new bond. Yes, we did. McCullough duration for the new bond and the McCullough duration based on fixed annual repayment. Done. Impact of the two proposals on financial position, focused earnings, EPS and gearing. Done. Coming to the fourth one. Using the estimate, discuss the impact of the proposed financial recurrence and the proposals on the use of funds on the company, the credit rating companies, the equity holders, current and new debt holders. Okay. So here basically they have told, including the suggestion made by the CEO. That's why you talked about CEO there. Okay. So basically everything is done. Check the format. Everything is done. You have the proper main body, introduction, and now coming to the conclusion. Okay. Always when you write the conclusion, check whether everything is there or not. Because if you didn't include anything, you have still time to include it before going to conclusion. Because if later you try to put something, then you have to change your conclusion also. But if time permits, otherwise if you don't have time, just go ahead with the conclusion and write it. Don't try to change any figure. So now we are coming to the conclusion. Overall, it seems this word start with overall, because overall what are you saying? Now you're not saying individually. Overall, big picture you're looking. What is the impact of this financial reconstruction? So it seems that the proposed, okay, try to learn these words the way they are using sentences and all for conclusion, okay. It seems that the proposed financial reconstruction will be beneficial. First line itself they are telling you. So by first line you are getting that hint or the main idea that this is beneficial or this is not beneficial. So your conclusion first line has to be this. Main topic in this question. What are you going to say? McCullough duration increased or decreased? Bond value increased or decreased? No. In your conclusion, you are going to say the financial reconstruction. Main topic is financial reconstruction. That only you have to talk in the conclusion. It seems that the proposed financial reconstruction will be beneficial. Comma. Now you are giving the reasons why. Based on what how you are giving the reasons? Based on a calculation. As it will provide opportunities for the company to make additional investments or an opportunity to reduce equity capital. One of this is possible. Either additional investment, either equity capital you can reduce and thereby increasing earnings per share. You saw EPS increased. In both the cases, proposal 1 or 2, EPS increased. We saw that. The increased gearing may not look large, may not look large when considered in terms of market values. Yes, when you are giving some problem, give it in such a, it's like you're arranging it nicely and you're saying in a nice way so that it doesn't hurt. So increasing gearing, yes, it looks very risky and all. But when considered in terms of market value, it might not look so large. The one which I'm underlining, highlighting are the main keywords. It has to be there in your conclusion. It may also be advantageous to undertake the reconstruction scheme in a period when interest rates are low. When interest rates are low, it is better to have this reconstruction scheme. And the credit migration is not this. See, wherever you are having disadvantage, just say that this might not be so disadvantageous because the benefit outweigh the disadvantage, or disadvantage is more than benefit. Such has to be your conclusion. So in this case, benefits are more than drawbacks. Therefore, and the credit migration is not disadvantageous. Okay, this is another thing. However, when you are giving a drawback after advantages, you have to use connecting words. It could be like however, but. Conjo company needs to be mindful of how it intends to repay the capital amount in 5 years time. The information it will disclose to the capital market and the impact of any negative restrictive covenant. So there are three disadvantages. One is whether they can pay the capital amount in 5 years time. The other one, information it will disclose to the capital market. Other one, the last one, impact of any negative restrictive covenant. All this they have to consider. So when you are giving conclusion, you have to say that okay, it is beneficial, these are the advantages, but even though it has advantages, there this okay, 1 2 3, just list whatever it is. These are some few disadvantages which they need to look for, or they need to find some ways to mitigate them. Such should be your conclusion. This is the way. Most of your conclusion will be similar only like this. Okay, and your conclusion usually comes in section A only for 50 marks question. For section B it is not required because it is direct. You know that this is the question based on this topic, but section A is not like that. It could be from any topic combined in one single question. So you have to be prepared for that. If you see now, just see the report. Maybe I can just try to make it small and show you. Okay, just see. It's a very lengthy report, and if you see on this side, all these are the appendix on the right side. So that's it for this, and I hope. Okay, and check your 4 marks also. Did you write in a report format? Yes, you did. You started with introduction, proper headings, subheadings, conclusion. Structure, yes, you followed the structure which is given to you. Presentation, yes, you did the presentation. You wrote the appendix there as an appendix, and you wrote it in the main body, the report. So everything is followed. So you can be sure that you will get the professional marks. Take care of your professional marks. Do work more on reports. These are the tips I can give for section A for all the questions. In fact, for my next question, what I'm going to do now is my next question is 49. As you can see here, it is a March-June 2017 paper. If you're seeing my video now, do practice this question. Just go through the question. If you don't practice it or don't do it, answer it is fine. But do just go through the question and all, keep so that you are ready, so that I can go faster, right, on this question. Right, it's helpful for you also. It will save your time and my time too. I can go a bit faster than today because this is the first, so I wanted to take more time and all. Usually I'm planning to take at least 1 or 30 minutes. It's fine because this needs a 90 minutes. So more than that, I don't want to spend on a question. Otherwise, then it becomes too lengthy and then it becomes too boring if I become very slow. I don't want to be too slow. I don't want to be too fast. I just want to be at a, you know, at a good speed. But I felt that in this video I'm too slow. So be prepared for 49 and then come before you see my 49. So that when I explain, the way you process it becomes faster. Because usually I go through the question and all. I still will go through the question. I read the questions and all. Then it becomes like when I read the question and when you are also there, you will not understand the question. You will be blank. But when you keep the question, when you read the question before, and when you know exactly what the case study is about, and it will be easier for me, and it will be easier for you to understand and pick my points easily, connect. You know, I can explain from any part of the case study, and then you can easily understand. So I think this will be helpful, and that's it. And I think I have, oh yes, marking scheme is left. Let's go to the marking scheme. It is very important. Part B. If you see last, just go to last report format. Okay, 1 mark. Structure and presentation, 3 marks. So coming to part B first, appendix 1. Okay, their yield curve based on BBB rating, 1 mark. That means you cannot go wrong in any of the year. You have to be correct in all the 5 years for you to get that 1 mark. Bond value based on BBB rating, again 1 mark. Comment on the reasons for visuality, no change in value. If you are commenting on it, you're getting 1 mark. Why there's no change in the value? Calculation on the coupon rate of the new bond is 2 marks. Comment on that. See, every calculate, comment. Coming to appendix 2, duration based on annual coupon and the balloon payment of 100 in year 5, 2 marks. Amount of fixed annual repayment, 2 marks. Duration based on annual equal to 2 marks. Everything is 2 marks. You cannot even go wrong in any one of this. Coming to appendix 3. Financial position, 3 marks. Financial position 2, 3 marks. Interest payable and higher, both are 1 mark, and return is 1 mark. Gearing calculation, 1 mark. EPS, 1 mark. Last, discussion. Okay, impact on the, this is very important. Majority of your marks are here. So, but to come to this point, your all the previous step has to be correct. Okay. And one more thing I want to say is, don't try to perfect when you are know that you're running short of time, and when you know that your calculation something is wrong. My advice is, don't try to change the figure. Keep it there as it is and go ahead using that figure. Even you know that it's wrong, because let me tell you this is a practical experience of mine. Okay, as you know, I gave June 2019 I gave the AFM paper. What happened was, my first question, 50 marks question, there itself I did a blunder. I got a net present value calculation, and I had to make this table. We know that cash flow table and all, normal net present value with real options. So I had to make a table, and at the end, when I got the cost of capital, I came to discover that my working capital, I didn't include that working capital there. Then I think my tax allowable depreciation or something, I included it, but the figure went wrong. I put it in the wrong year. So then I know that my everything went wrong, and then that time I didn't have much time, right, to change. I didn't change the table at all. I know it was wrong. With using that cost of capital, I did everything. I found my net present value, everything I did, and then based on that I wrote the report also. I wrote the conclusion also, that they should go ahead with this project or not. And then question 3, question 2 I was able to handle. I got it was a risk management, interest rate and exchange rate. I got both together in one. And then I think question 3 was reconstruction question. I was not so good in reconstruction back at that time. Now though I have practiced a lot, so it's easy for me to explain. But then back then I was not so good. I even hated this chapter like hell. I don't like reconstruction, and I was like, but somehow I managed to study. I didn't skip it. And that question was hard for me. Trust me, I was not able to understand the question. I was not able to do anything. But what I did was, I kept my formula ready. Equity, beta, asset, beta, all those things and all. Somehow I got some number, used that, and I wrote my assumptions, and I did that. You won't believe that when I came out of that exam hall, I know I made all those mistakes here, there, and but I don't know, something was there in my heart. My gut feeling was saying I was very positive. I was like, I will pass this paper. I was not expecting, of course, not so high, but yes, I will pass this paper. I didn't have this fear that I'm going to lose and all. Why? That confident? Because I know that whatever I know that I did it in a report format. I know that I did all the wherever I had to write, I wrote something, but I never left anything blank. I never did that, or I never try to change any figure or cut and all, because then it makes you will lose your professional marks. It looks untidy. Again, you have to do. You will not get that time to do it again. It's very lengthy. How many time? How many places will you have to change? So don't do this mistake. It can cost you a lot. Because I learned from my own. It was you know a very risky thing, but then it actually works. It eventually works for everyone, not just for me. The one who tries to change their this thing, in fact, they are the one who fail because they are wasting their time there. Already my 90 minute has passed, so I cannot spend more time on that. What I did was I just wrote the assumptions. There was next question was state your assumptions. So I started stating some assumptions, few assumptions, and then I wrote the conclusion with whatever time I had. Maybe 5 minutes extra I spent on that. And you won't believe that I passed with 60 in my first attempt itself. I passed with 60 because I always learned this one technique which my sir always used to tell me: go ahead no matter what. Even if you're wrong, correct. Don't try to perfect. Perfection kills you. Never try to perfect. It doesn't help you at all. Trust me, it will not. Rather, just go ahead with whatever you have done. So that's the advice I would like to say. Now, coming to the fourth point: impact on Conejo company. 6 marks, if you see 6643, it's very huge marks. So at least you have to write 6 points, or maybe 3 points you can write. So 3 into 2, explain them in detail, you will get 2 marks. Even for credit rating companies and the CEO's opinion, 6 marks. So 3 points you can give, and then impact on the equity holders and debt holders, 4 and 3. Please follow the marking scheme also, because we just have 1 month left for AFM exam. March 5th is your exam. We don't have much time left. That's why I'm giving all this. Whenever I remember something, I don't spend, I don't delay, I don't keep it for later to say. I might forget later. So wherever I get, I just tell. Okay, so do follow all these techniques. Keep your the main area where you are going to write your report neat and clean and tidy. I'm not saying that your handwriting should be very neat. Okay, you have to write very nice handwriting, but yes, your workings and all, it should be in a proper way. Everything underlined, heading has to be there. If you have to use a ruler, draw columns, table, use proper ruler, everything, put label it. But don't just do it in any order, in any way, not in a haphazard way. It doesn't look good. When this professional paper you are doing, you have to look professional, and you have to display that professionalism in your work, in your report. Just think that when you are making a report, this is not your exam, you are writing a report to your board of directors. See the tone which you are writing. Don't be personal. Okay, don't say I think, in my opinion. Okay, I don't think this is wrong, he's wrong. What bullshit is this thing? He's totally wrong. You cannot use such languages. Even if someone said some statement, some CFO or CEO is wrong, you cannot state it like that. There's a way of saying, courtesy of saying. You have to adopt that professional tone when you're writing a report. If you see the report, every time they have been referring to in the company's name, and the conclusion also they are giving in such a way. They are giving facts and figure, not your personal opinion. Yes, it is you who is recommending, but it has to be based on some facts and figures or some calculations you did. You have to say based on appendix 3, based on the calculations they suggest. You cannot say I recommend, you cannot say I believe, or in my opinion it is wrong, it is correct. You can't say like this. So avoid all those. and try to read. Don't try to read answers. I would say don't try to read reports. It will not help you anyway. Try to write. You might get wrong. You might get stuck also, but write it. So that's it for this. This is part 2. You have to see this after you see part 1. Okay, so don't see this before you see part 1, otherwise you will not understand anything. This is linked with your part 1. Okay, so thank you, take care, and God bless.